Hi there, this is Steve Mai, the market chartist on behalf of forextraders.com, and we're now taking a look at the euro versus the US dollar and also the pound versus the US dollar, both showing a resilient positive tone in here through March, particularly since the FOMC meeting in here that we saw in the middle of March, with euro sprinting higher up through this neckline to this inverted head and shoulders pattern we have down here, and then breaking that neckline is certainly setting up risk of a shift to a more bullish tone. Despite some hesitancy at the end of last week, which might see a slight dip lower, we do see the risk up then through this peak from early February, and a break of 108.29 would then reinforce the previous break of this neckline in here and shift to a potentially more bullish tone in here, a more positive tone. And then certainly through 108.74, should we get through that December 2016 high, the outlook will be far more bullish for the euro going forward into late March, early April. Similar technical setup if we just switch to the pound in here, not quite as bullish. So for the pound, again, the push higher from mid-March since the FOMC meeting. The market just stalling ahead of these resistances here at 125.70, 125.82. Back from 125.31 at the end of last week. Potential for a dip lower at the beginning of this week. However, within a broader range theme, which we see defined by these parameters here, 127.75 and 119.82. We'll zoom out now to the daily chart and see that better. These broader parameters in here from last year defining the range. Within that range environment, the risk certainly to the top end of that range and potentially into probably not late March, more likely into early April, threat for a push above 127.75, which will then see a more bullish shift. This has been Steve Mai, the market chartist on behalf of forextraders.com, and I wish you a great trading week.